Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. And if you're up in that northeast, that snowstorm, be safe, folks. This is by an unknown writer. Dare to believe. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 38, NASDAQ up 15, S&P's up 2.5, gold contract down at $2.80, trading at $1,198 an ounce. Silver up 3 cents at $16.19 an ounce. Platinum down $1.85 at $1,180 an ounce. Copper flat at $2.67 a pound. Light sweet crude off 65 cents at $50.88 a barrel. Bonds, we had the 10 and the 30-year both reject lower price, had lighter volume. They end up being flat. 10-year actually went up 4 ticks at 127.01. 30 flat at 158.22. They both want higher price, folks. King dollar up 414 ticks, 96.40. Bottom line, yesterday, King dollar took a B point out. It took out its January 26th high with volume. That's setting up a 101 King dollar. So coming into Friday, tomorrow, inside not only King dollar, we have the jobs numbers. Bottom line, when you look at the metal market, we'll see how gold reacts and silver reacts tomorrow. Because what has happened is this. Dollar, wide price spread, accelerated volume. Yesterday, it's a fall through today, and they still didn't whack the gold market. Coming into a Friday, we got to make it by Friday. That's the real bottom line here. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, let's go over the world of the S&Ps. We'll take a look at the SPY right now and see what we have happening out here. So, actually, we're going to take a look at the cash S&P because tomorrow, folks, what we have is this. You have jobs numbers that are coming out tomorrow morning. The Challenger report that came out today, and by the way, the Challenger report, folks, is an awesome indication of where we are. John Challenger himself, we would see if we can get him on. Bottom line is that this comes out earlier. It's a no-nonsense deal about how many jobs were made, how many jobs were taken away. It is definitely different than the jobs report we're going to get tomorrow, but it gives you a nice indication of what's going on. And what came out in the jobs, the Challenger report this morning, was that you had a lot of lost jobs in energy and retail. So we'll see where this baby does shake out. I expect what you're going to see is that the jobs number is not going to come in where many analysts think it is, meaning we've had a huge acceleration in jobs the last 3 years. This energy downdraft is going to affect it. No two ways about it. In retail, he was bringing up the aspect that retail was laying off tremendously. He was also brought up the aspect that what's going to be in these numbers is that Radio Shack went bankrupt. So a huge amount of people got laid off right there. S&P. So cash S&P, this is what we have. The cash S&P right now is trading out at the 2103, 2101.89. A close under 2110 tomorrow indicates that you are still in the lower end and you broke the uptrend on a channel basis from 2011. And when we broke that, folks, what we did is this. This is where the probability goes much higher, and this is what it is. If we take a look at this S&P and you bring it back, what you're going to see is that this uptrend, basically, you can make the argument that it started in November of 2012. The larger one, I think, my take is that we really started in October of 2011. 2011, the S&P is at 1074. It's doubled, right? Without a meaningful correction. That's the real bottom line. You had a couple. We went from 1419 down to 1306. That was in 2012. Then we went to 1474 down to 1359. That was also in 2012. Other than that, bottom line, the biggest pullback we had since then was in 2014 when we went from 2019 down to 18.20. That was a couple hundred bucks. Okay, that being said, that downdraft that happened in October was the first time that we had wide price spread, accelerated volume, breaking the trend. And when you have wide price spread, accelerated volume, you break a trend like that, most times you always go back up and try to get inside the trend again. Well, what the S&P do? That's exactly what it did. It went up and tried to get inside it, then did get back inside it. It got back inside it the week of November 3rd. It stayed inside the trend from November 3rd up until December 2nd, so 4 weeks. It gets back downtown again, huge volume again, stays down there for 2 weeks, goes back topside again, December 22nd. It stays up there for 1 week, comes back downtown January 19th, gets up there and only stays there for 2 weeks. Now we're back down on the other side of that trend. We'll see how this baby shakes out tomorrow. My take is that what you're going to see, here, I'll bring the future up so you can kind of see this, how this is shaking out. So that's the cash S&P. What happens with the cash S&P is this. The cash S&P does not trade. All 500 stocks have to trade in order for the cash S&P price to get generated. The reason that that's so important to understand is this, is that the futures themselves can be manipulated by large traders on a small basis, meaning small time-wise, okay? Whether it's an hour, 2 hours, 20 minutes, 30 minutes. You get large operators throwing 200 contracts, either buying or selling. You're going to basically get accelerations up or down. The cash S&P, different ballgame, because all 500 stocks have to be traded in order to get the number. When we take a look at the actual futures of how the futures been trading the last few days, what we have is this. The futures this is the E-minis. The E-minis are having a heck of a time getting over 2103. We got to 2103.50 today. Yesterday you were at 2103.50. The prior day to that we were at 2113. That being said, what you also have is on the way down at 10:30 yesterday morning, you get 2085. That's wide open, huge volume down there. This morning you have 2093, same deal, huge volume down here. And what that sets up is that it sets up at least a test of that lower area. The NASDAQ composite, the NDX 100, the Russell 2000, all of those are still in an uptrend. They have not rolled. Bonds, what do we have with bonds? You get the 10-year, the 30-year, both want higher price. Both of these structures, what they did out here today is this. They got into the swing low of the last few days. They rejected the swing low. They closed at their highs. That is saying that they want to go after the swing points from December 26th. And if that's what you have, what you're going to see here is that you're going to see the aspect that as they go after that baby, that you more than likely will see whether they get juice behind it. But that's saying to me that they actually want to go to the high, which is that January 30th high. That's saying bonds are not done yet. Now, King Dollar. And here's where this divergence out here. The market has loved King Dollar going higher. That's for the last 8 months. What we've had thus far, King Dollar yesterday took out a B point of an ABC structure in the way up, took it out with volume. So what we had with King Dollar, as we were going through King Dollar each and every day, there was two separate benchmarks. You had the benchmark that it took out yesterday, which was the January 26th high, and then you had the benchmark of the February 3rd low, because the February 3rd low, it was 93,838, and that's where we came down with volume. Bottom line, what does it do? It goes topside, takes it out with volume, follows through today with price. Volume also was good, 37,000 contracts. We're at 96.40. What this is set up is that this little baby is a confirmed ABC structure into the 103 area. So what does it mean when it's a confirmed ABC structure? What that means, folks, is this, is that your probability that you're going to get a 1-to-1 price projection is pretty good, okay? What you can get is because if you take it the B point out with price and volume and wide price spread, which we got, most of the time you're going to get a 1-to-1. You can get something more than that. The divergence is that the market yesterday basically pulled back. The market today was flat, and gold didn't get smoked. So tomorrow is going to be a monster day out here. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.